Are we live? Is this it? There you
We
are.
should be here. I'm going to lean in like this. Hi.
Come on.
Hey, everybody. Welcome to episode 19 of Facebook Calls with Paul. We are super excited to be back. We took the summer off with the kids.
And we're on the road now.
Well, and remote today. And I'm still personally getting adjusted to stay 7, 8 of school. And the schedule, you can tell from the bags under my eyes, I'm still getting readjusted. The kids are great. I'm not so great.
But you look.
But we're doing it. And so today, we're episode 19. We're here, and we are so excited to be joined with Cindy Yates of Capital Title of Texas.
Hey, Cindy.
And we're doing it here at Capital Title. So thank you so much for graciously allowing us
to
pick your brain and use your facility. We're so excited about that. And we're talking about opportunity zones, which I don't know a lot about. Cindy does know a lot about, and it's a really cool program, I think, for a lot of our awesome clients. So if you are thinking about jumping into Austin real estate, there are some tax incentives. So Cindy's going to help us all understand that.
Well, I think just to get everybody really excited out there, this is a way for you guys to avoid taxes. Not, you still got to pay taxes, but you can avoid them. And the state and IRS is some good.
Oh, wow, that's definitely nice. All right, so Cindy, let's start with, tell us a little bit about what is an opportunity zone? Like, what's this mean?
Okay, so in the recent tax law in December 2017, they put something in there to help communities, low-income communities, and so it's called opportunity zones. And so really, it is to push investments in those communities. And so for investors, there's tax incentives, just like you said.
And it's all the way around the country.
All over there's 87 different opportunity zones for investments.
That's
21
amazing.
in our Austin area and more in Williamson County as well.
Do we have an unfair share in Austin?
No, that's
20 out
that
of
is
80
not
for the whole-
unfair. There's nothing unfair about Austin getting
No, it's
a
great.
nice
It's great, but like 20 out of 80 and 20 of them in Austin.
Yeah, 8,700.
Oh,
across
8,700
across the United States.
Got it. Then we got shortchanged.
Yeah, I think so.
Yeah.
But honestly, most people are shocked with the number in Austin because we're growing so much. But we do have 21 areas for opportunity zones. And so what you get when you invest in an opportunity zone is you get tax incentives on capital gains. And so when you have a capital gains event, unlike a 1031, because a lot of people get confused, it can be any capital gains event, a large or a small.
Stock market.
Yeah, you could sell, I'll give you a scenario. Let's say that in 2010, you invested $200,000 in Facebook. Amazon, whatever.
That was a good move.
Yeah, good move.
Good move.
And so you cashed out and you just made $1 million off that investment, right?
Yeah.
So you have $1 million that you're gonna have to pay capital gains on.
Ouch.
Yeah.
Yeah.
If you wanted to take that $1 million in the capital gains and invest it in a capital gains fund that invests in capital gains properties in the zones, you could defer that capital gains tax liability immediately. And if you hold it for 5 years, you pay less 10%. You hold it for 7 years, you pay less 15%. So in other words, you would only then pay after 7 years capital gains on $850,000.
That's a really good encouragement to put
And
that.
I love that it's not necessarily real estate to real estate, that you can go from stocks to real estate.
Any capital gains event.
And we, of course, think real estate's a better investment than stocks anyway. So,
but not all of our clients have $1 million to invest. So like
it could be
is there a minimum or is there
it could be large, small, any capital gains event. Now that is a great incentive.
It is.
But the really amazing incentive is that $1 million that you invest in that opportunity zone, the appreciation or the money that you make off of that, if you hold for 10 years, you have 0 tax liability on it.
Wow.
So you're avoiding taxes
so we
if you hold it.
Completely avoid tax on that. So let's say that you then put the $1 million into a fund that you invest in investment properties, a real estate fund, that you're going to find real investment properties in Austin.
Yeah.
Right?
Right.
And then in 10 years, that makes the person $5 million. their tax liability is zero.
That's amazing.
Zero.
So you put money in, you get money out tax free, but what's the catch? Do you have to do some fix up or what do you have to do?
There is. So obviously they're wanting these neighborhoods to be developed, to be better, right?
Yeah,
so you're looking for properties and really, there's some different things in the law, and I always suggest, look, you got to read it, talk to your CPA, talk to a tax attorney, as
We're not holding you liable.
Thank you. But essentially 50% fix up.
Yeah.
So you take a property and they want at least 50% investment into it.
Okay, so
and
if
then
I buy $100,000 property, I got to put 50 grand into it.
Yes. Right.
Is that right?
I believe that's right.
Something
Correct.
like
Yeah.
that.
So they want to fix up into a property, right? A better,
That's fair.
and also into the business. So if you buy a business, they want the business to be improved upon. And there's some other regulations. So if you have a fund and it has, you put that $1 million
other
fund, you
people
got
are
to
going
use
in
it.
there and doing the same thing, so we're all appreciating together
Right.
while we build up these
You're building the
opportunities.
neighborhood, right?
Okay.
Now, where are most of the opportunity zones in Austin? Are we going to find these in Central Austin or where?
Mostly east of 35.
Okay, so I'm going to ask the ugly question.
Do it, but
Does this hurt our affordability? Like, are we now going back and now gentrifying again further some of the areas that have been more affordable historically? And are we going to continue to be pricing people out with these opportunity zones?
Well, that was something that they really looked at when they were deciding the areas.
Okay.
That was something that they wanted to exclude areas that showed promise for gentrification, right? But there's not 100%. But you have to think about, we look at it from a real estate person's background.
right.
But this incentivizes hospitals, doctors, restaurants. So there's businesses that are going to go into these areas that may otherwise not.
And potentially create jobs in those areas.
Jobs and opportunities
Right.
for these neighborhoods that otherwise wouldn't be there. And
So
access to
I might take
healthcare.
a Chick-fil-a in there.
Absolutely.
And,
that you
grab
otherwise
it.
wouldn't have,
Yeah.
because it's going to give you so much tax incentives. There's funds. There's $1 billion out there and set up in funds, and most of them are for business related and real estate related projects.
Yeah.
And some of them are really going to have these communities.
Oh, that's cool. I didn't realize it was beyond just real estate
It
investing.
is.
Yeah.
That's exciting.
You have to buy real property, but most of the time when you are putting in a doctor's office or a new Dairy Queen, you're buying the property.
Right. So I need to buy property, fix it up 50%, and do I need to apply ahead of time in the opportunity zone, or do they just know?
There's some tax forms that you have to go through. There's some requirements. You have to, you can be a corporation, you can just be an LLC, but there's a couple of tax forms. It's like a 2-page tax form. It's not huge.
Pretty easy.
Can individuals do it or not?
You can. You have to form some type of corporation, but an LLC would suffice.
Okay.
To
like Homesville.
To be able to form a fund.
Yes.
Right. Yeah.
And is this something that the city of Austin is monitoring locally, or who administers the program? Is it federal? I mean,
it's a federal program, but they have people locally that are over it, that kind of are the go-to people that are your contacts.
What are you seeing people doing in Austin? Like, are you aware of some of the things people are using?
There's developments going in. There's people buying investment properties, local businesses, a big influx of money coming in. Most people, when as far as, CEOs and stuff, when I talk to them about it, they've heard of it,
right,
and it's on their radar screen.
Right.
So definitely, in their decision-making process.
Are you seeing a lot of Austin area developers that have traditionally been in real estate kind of taking advantage of these opportunity zones, or is this still relatively under the radar, do you think?
I know of one that is specifically doing one in the opportunity zone for affordable housing.
Oh,
nice.
Wonderful.
And so, and he usually does, really expensive,
super
high end, and took this as an opportunity to go
that's really cool.
promote in that
That's
area.
Really cool.
So it's, I think it's exciting. It gives people an incentive to do the right thing.
Yeah, it's good business, and
Good business. And does
good
and,
for people.
Right.
Yeah.
I believe in investing in real estate. There's no better return for your money.
Yeah.
And then now you have the tax incentive.
Yeah, I mean, it's kind of blowing my mind, all the opportunity right there.
Yeah.
It's incredible. So I teased everybody up with the good thing that the IRS did. Do you want to expand on that a little bit?
Well, yeah, if you want more information, if you want to find out where the different opportunity zones are. In fact, I was with my dad in the hospital, and I was telling him about meeting with a congressman, talking about opportunity zones, really trying to, brag.
Right.
And
as you should.
As I should, as a daughter should, right? Yeah. And he was like, all right, I know everything there is to know about opportunity zones because my little small town of Paducah, Texas is an opportunity zone. And I was like, you're kidding me. So I got on the IRS website, which you're mentioning.
Right.
The IRS has an amazing website, which is shocking, right? Because it's
right.
IRS.
Yeah, it is.
You can put in an address, you can zoom in and look at any part of the country and see where the opportunity zones are.
Is there a URL that goes with that, or is it some kind of funky IRS?
It's just IRS opportunity zones.
Wow.
It's really easy to find.
I mean, I did a little bit of looking myself. I know the AustinTexas.gov website has some information on it, and I think on there they have links to a lot of information from the IRS. The IRS frequently asks questions. And a lot of stuff I didn't click on. But then, like if people are wanting to know more and you're really curious about this and you want to dig in, certainly that IRS website's a great place to start, or AustinTexas.gov would be another place. So I'm excited to hear about that these even, it's not just the urban areas that are getting developed, but some of the areas across the nation that might be seeing the migration out of the towns and whatever are getting that many too. That's great. So I'm also curious because I know a lot of times with IRS or any of these bills and laws that get passed, there are usually windows of opportunity. There's short timelines. Are there any, when does this close? Are there any deadlines that people need to know about?
Well, I would suggest going to the website and looking at the timeline.
Okay.
As you mentioned, I think there is a timeline coming due to maximize your tax benefit. Maybe this December. So I would go and if you're interested in investing in real estate, I would do it sooner than later.
Yeah.
Once you have a capital gains event, you have 180 days to put it into a capital, into an opportunity fund.
Nice.
What's different again than a 1031, it doesn't have to be held by a third party. Let's say that you have the capital gains event of $1 million. It doesn't have to be that exact $1 million that you put into the fund. Just within 180 days, you have to put $1 million into a capital gain. I mean, an opportunity zone fund.
Right.
So.
Right. You got to get it in there for it to be safe. But I could also put in 900 and keep 100.
You're just gonna have to pay.
Do whatever. Pay taxes on that, just like normal. Okay. That makes sense.
But it has to be capital gains. People have asked me that before. Because it's exciting. They want to put their own income, and it can't be.
So it can't be my savings.
No.
I can't just take my savings and.
No.
But I could sell my house and go do something in the opportunity zone. Is that right? So that'd be equity. Yeah.
Yeah, and I'm thinking, I don't know a lot about it, but I did look at some of the deadlines, and it looks like the next one, like you're right, is coming up on December 31st. So I guess, would there be an opportunity from a real estate perspective, Paul, for people to get something done before December 31st?
That's what I'm thinking. Like investors could sell. You could sell a property, and then you could go flip into the opportunity zone and take advantage of that. Is that right?
Yeah. Or so cash in some investments, cash in some stock that you're not getting a lot of return for. You know that right now, and you could speak to how much the return is on investment properties.
That's crazy.
It's amazing, the return on investment. So, if you're in some type of, you have some type of stock or something that could cash it out.
Yeah, and you want to really hit the gas and get into real estate and make some money. Can you also get financing for this? Can you do financing with the opportunity zone money?
No,
it has to all be cash.
This kind of stemmed from previous years where they had, and I forget the name of the incentive, and that was based on people getting loans to go invest in these areas. this is based on using cash, equity,
Right.
and to go invest in these areas.
But the
Putting
cash
that
that you're
work.
using can be the money that you put into the opportunity zone, or if I'm investing $1 million, I also need to have another $500,000 to use to do the development.
Right. Okay.
Or I'm basically depositing this money into the opportunity fund and then getting to withdraw it to apply towards. How's that work?
There's so many different guidelines
Okay.
on how you have to utilize the money. Like you can't use some of it for working capital. Let's say that you're buying into a business. Like there's guidelines on the amount that you can use for working capital.
It has to be into the permanent.
Right. But you can, there's two different avenues to invest in opportunity zones. One is to invest into the property, right? Another is to invest, both have to be into a fund, and that fund then has to invest into a property, or they can invest into a business. And then that business they can run with some type of holdings, right? And then there's guidelines on those, which I hazard to speak on because I
does
know
the business
it.
need to be committed to the neighborhood?
It does. It does.
Yeah.
So the products that they produce has to be a percentage, and it's a large percentage. I want to say it's 50 to 75% has to be there in the neighborhood. So let's say if it's a doctor's office, they have to serve the people in the neighborhood. If it's a restaurant, those are kind of obvious. But let's say that if you're putting in a shipping company, that's not as obvious, right? They want things that really support the neighborhood.
Yeah.
So there are some guidelines for the type of businesses that can go in there.
Nice.
That's really cool. What have we not asked? You are such a more knowledgeable on this topic than we are. Like, I'm sure there's stuff that we have not thought to ask you.
Well, there's more questions or things that I don't know about it, like, the guidelines and things. But to me, it's just so exciting. Like, I love real estate.
Yeah.
And and government, we laugh about the IRS and stuff, but anytime you get an incentive to go help people in neighborhoods,
It seems like a win for
it's
everybody.
a win-win, right? It's a win-win. And so I just think for people that are on the fence, that are thinking about getting into real estate, it is a win-win. And for them to really reach out to you because you really are the expert on real estate and how they can turn that money into profit.
Long term.
Like
legacy kind of wealth is what we're talking
Absolutely.
about.
And then my mind is churning. I'm sitting here, I'm wondering, okay, could you potentially partner with a group of people and form an LLC?
Absolutely.
And have each individual of the LLC or whatever corporate form you form all cash in and create capital gains that then they pool and access as the LLC. And I certainly don't know the details, but I'm just thinking about, okay, is there a way to partner with people and even increase your opportunity to invest and maybe do more good, which of course it's you hopefully getting some dividends from it in the end.
And even if you have an idea, like if you have a business idea, there's funds out there. There's people that have had giant multi-million-dollar capital gains events that they have put into these funds. So there's huge funds already, published. So we can print that list. I have that list of these massive funds that are just waiting for great ideas to be brought to them.
That's really cool.
Right? And so if you have an idea of an area in Austin that you want to do a business in, or, then right now there's funds available that people are itching to get into these areas, invest in you, and put that to work.
That's
really
really
wonderful.
cool.
We need to put our heads together.
Well, I think we might. All right. So, Paul, from a real estate perspective, any final thoughts about this that you want to share with our audience today?
No, I would look for the areas around the opportunity zones to appreciate along with those zones, because, as these things get developed up, you're going to see more growth.
So even if maybe you're doing an opportunity zone and you're buying some investment properties in that opportunity zone or surrounding neighborhoods.
Yeah. So
calculating, but I like it.
Yeah.
Cool. Well, thank you guys for tuning in. That's right at 20 minutes. We really appreciate you joining us, and we're so grateful to you.
Oh, thanks for having me.
We know you have a busy schedule, and for you to share your expertise on this is very nice. So thank you so much.
I enjoyed it. Thank you so much.
All right, you guys, next week, episode 20.
Wait a second. Is this Saturday the Longhorn game?
Yes, I think it is.
Okay, so hook 'em.
Hook 'em horns. And then next week, episode 20, we're thinking about talking about how to read a closing statement. But we're nailing that down. If you have any suggestions that you want to hear about, let us know. And if you like this episode, we always love it when you give us those thumbs up and you share. So thanks for tuning in, guys, and we'll see you next week.
See you.